Let's get in G. Chokkalingam, Executive Director and Chief Investment Officer at Centrum Wealth Management, to talk about the momentum of the market and the sectors and stocks that one should bet on. Thanks for being with us, Mr. Chokkalingam. To start off with, it seems like the markets aren't really taking any clear direction ahead of the budget. Do you think one should, at this level, dabble into the stock markets or just stay on the sidelines?
I firmly believe that one should, use this last 2 weeks meltdown, particularly in the mid-cap space, to accumulate good quality stocks. Instead of betting on the whole market, people should bet on individual stock ideas. And there are many ideas which have been hammered anywhere from 10 to 30% in the last 2 weeks. And also considering the fact that, in our view, the budget is going to be very responsible, as FM has mentioned. And therefore, I don't see any concern coming from the budget. So in the interim period, people can use to accumulate good quality stocks.
Right. So when you say, investors ought to be looking at individual stocks, and there are enough stories that have been beaten down 10 to 30% over the last few weeks, which ones would you be putting your money in?
There are many stocks. I would basically, a couple of ideas I can share. Something like, say, South Indian Bank, which is available at 1 times book value, whereas other competitors are available at around close to 2 times book value. And there's a company called Balmalari Company. It's a logistic company. This is the only company to post about 14% profit growth, when most of the logistic players have posted degrowth in the profits. And similarly, Engineers India, it has become a victim of little poor results for the December quarter, as well as the divestment proposal. So the moment the government proposed the divestment, the stock has taken a huge beating and sitting on a lot of cash, and we believe that orders on hand would cater to next 1 year. So these are some of the stocks we are using, using this current meltdown.
What would be your view on the auto pack? Because today we had CLSA, which came out with a report, and they said that Tata Motors and Maruti remain their top picks, but they seem to be negative on the overall two-wheelers. What's your view?
Auto sector, particularly the car segment, will have pain. The interest rate has to come down in the system. In two-wheeler also, what we are observing is that the Honda Motor is giving tough competition to the local players. So I won't touch entire two-wheeler except Bajaj Auto, because in our view, Bajaj Auto has the strength to give tough competition and survive this competition, which is coming from the Japanese player. Also on Tata Motor, anywhere around below 300, I would suggest buying, because I firmly believe that if monsoon is normal, the interest rate cycle reversal would be very aggressive. We can see anywhere from 75 to 100 basis minimum cut in the repo rate. That would be positive for the commercial vehicle segment, because which is most sensitive to the interest rate cycle within the auto pack. So therefore, any further correction is there, one can accumulate Tata Motor. So I would bet on these two major players in the auto. And as far as Mahindra and Mahindra is concerned, one can hold on. If there is any further 5% correction, one can buy aggressively Mahindra and Mahindra. So these are the three stocks. Otherwise, I would not touch any other stocks in the auto pack.
Right. And again, between realty stocks and construction materials, where would you put your money? Would you stay away from realty because of the problems that many of these companies continue to go through, and focus instead on construction materials like maybe cement, ceramics, steel, etc., which pretty much mirror the revival in demand for real estate?
I firmly believe that there would, it would take another 1 or 2 quarters for the real estate firms to, come out of the pain which they are going through. The interest rate, hasn't come down substantially. It has gone up by 375. We have seen only 70 basis cut. So unless interest rate is cut significantly in the system, they cannot grow much faster. So my specific strategy would be to, stay away from most of the highly leveraged companies. And even in the case of DLF, around 280, 300 you book profit and stay away for a couple of months and wait for the monsoon forecast. Otherwise, I would continue to bet on stock like Oberoi Realty, which is zero debt and a cash-rich company. So these are the companies, in case monsoon fails also, the damage could be limited because they don't have debt on the books. So otherwise, I would be very, very cautious on entire real estate players which have got a huge debt on the books.
ONGC has outperformed the oil and gas basket. It's seen a gain this year of close to 23% on some reform announcements. Do you think that this would be a favorite within this basket, or would you also look at names like a Reliance Industries as well as a Cairn India?
I would bet on Reliance Industry more than ONGC because the pain of subsidy, I don't think it's going to be resolved for ONGC in future. And I don't think the government can succeed in increasing the diesel price every month. I am quite disturbed that, the Truckers Association is keeping quiet. We don't know when they will rise up and resist. And they succeeded, in fact, through All India strike a couple of years back. So that fear is still there. As far as Can India, there is no doubt. The management itself has said that the cost of oil is only around $3 per barrel. But I would suggest that you wait for the budget day. As FM starts reading out the budget proposal, see carefully whether there is any further increase in the cess on the domestic oil, because last budget has increased it by 80%. And this could be one of the easy source for the government to, mobilize more money and come out of the pain on the fiscal deficit as well as oil under recovery. So I would wait till budget day. If there is no proposal to hike the cess on domestic oil, then just go and grab in India. Otherwise, wait for the cess and its impact on the stock price.
All right, Mr. Chokkalingam, thanks very much for joining us on the show.